Hello, my friends. Welcome on our webinar with Auxiliary and Auxiliary Intelligence, how to start building your Forex trading strategy. So first, very important introduction, my friends, because if you think that this webinar, I will tell you that you have to build your strategy on moving averages, indicators, price action, do this and that, like when to buy, when to sell, etc. It will not happen. It will not happen, my friends, because this is advanced stuff. So all those indicators, price action, etc. This is very advanced. Not very, but this is what you should focus on later. If you're just starting, and I guess that you are starting because this is a webinar for beginners, then you need absolute foundation. You need absolute beginner's knowledge. Everybody started at some point in their life. You had your first day at school, you had your first day driving a car, and you have your first day at trading. You need to prepare well for this first day of trading. You need to prepare well to build your own Forex trading strategy. And the foundation of the proper Forex trading strategy are not indicators, are not wonder tools which will tell you when to buy or when to sell. These are not foundations. About foundations, I will talk today. I will talk on this webinar. So my friends, well, first you have to know who is teaching, who is presenting, who is sharing his knowledge. So my name is Tomasz Wisniewski. I'm on the market for the past 12 years. I did countless number of webinars and seminars across the globe. I'm a professional trader myself. I trade professionally. I do it for many, many years. I was also an academic guest lecturer. I'm in the media sharing my knowledge. And I'm sharing my knowledge with you right now. So, my friends, first of all, very, very basic information. What is Forex Market? Because maybe you don't know, maybe you know, it doesn't matter. Really, because we're gonna go through it again. I need to make sure that you understand every single detail about trading. So Forex market is a market where investors, speculators, importers, exporters exchange or buy, buy or sell currencies. This is the biggest financial market in the world. Well, there is also now this quickly growing crypto market, which is expanding like crazy. And about the most dynamic growth, well, yes, now it's crypto market. But for years, Forex market had the most dynamic growth out of all markets. So who are the market participants? So you can see that there are governments, for example. Yes, governments participate on the Forex market, either like directly or indirectly, like through central banks. We have financial institutions I don't know, investment banks, etc. We have importers, exporters who need to exchange currencies if they want to exchange goods. Then we also have retail traders, so guys who just want to earn money on the price movements. You can call them speculators if you want. Where and when do you trade? You trade all over the world, and you trade 24/5, not 24/7, because Forex market is closed for the weekend. So first it starts New Zealand, Australia, then Japan, then you have all those Asian centers like Kuala Lumpur, China, then it goes through India, then European session starts. We have two big financial centers, Frankfurt in Germany and London in England, and then American session starts, American session ends, a session in Australia starts, and it goes round because Earth is not flat, it's round. Not many people say it's flat, but it is not, so it goes round for 5 days for 5 days in a week. Most probably you are from Africa or from Middle East or from yes, usually we have clients from Middle East and Africa. So Africa, we share the same time zone, which is good for trading because the main financial hub for Forex market is London, and after Brexit, it's moved a little bit to like Amsterdam and Frankfurt. But in general, the magic happens during the European session, so we share the same time zone. It's also very convenient for guys in the Middle East. We are not far, just like 3-5 hours difference, not a big difference. Let's move on. What do we trade? In our platform, Forex in general is trading currencies, but we talk about trading in general today. So it's not only Forex, like only currencies. In our platform, you can also trade precious metals. You can trade indices, but you can also trade stocks. And the thing is that you can trade CFD stocks, so contracts for difference, but you can also trade the stocks directly through our alpha account on MT5. You have direct access to global stock exchanges, and you can buy, for example, Apple or Amazon. And the best thing is that all this trading applies, all those trading principles apply to all instruments. So if you learn how to trade currencies or gold, other instruments like shares, for example, like Amazon shares, they do not differ in terms of the technical analysis. So once you will learn how to properly trade, you can use it on majority of instruments. So how do you start? Well, first you need a plan. Well, you don't always need a plan. Sometimes you need balls and a bird. Well, sometimes it's like this. But in trading, you always need to have a proper plan. You need to have an education. You need to read proper books, watch proper videos. Then you start with a demo account. Then you need to have proper source of news and information. Then you need your trading journal. Then you need to keep motivated, okay? Because motivation is very high at the very beginning, right? But later, after a few days, weeks, months, motivation fades away. So you need discipline. Motivation is transferred into discipline. And if you master this, if you change your motivation into discipline, you will be successful, because most of the traders, I mean, not traders, but humans in general, they give up very easily. So they are motivated at the very beginning, but after some time, the motivation fades away, and there is no discipline to move this process further. And trading psychology, of course. So you need a plan. You need to ask yourself few questions. Why do you want to start trading? What are your goals and targets? How much time do you have for trading? How much money do you have? What is your experience? What markets do you want to trade on? These are very crucial questions that you need to answer, because you cannot just open the platform and trade randomly, right? You really need a plan. Because, for example, how much do you have? How much time do you have? This is crucial for you to pick a proper strategy. Because if you just have a little of time, then you should trade in the long term, because opening trades will take you like few minutes, several minutes a day or a week or a month, and you just keep your position open for 3 months, let's say, or 3 years, and you just casually check the prices at the end of the week, for example, right? Because you're busy. If you want to do scalping is very time consuming, so we need a lot of time. Okay, so all those questions you need to answer in order to properly start trading, because we are asking ourselves a question: how to start building your Forex trading strategy. And you start not by finding out that this indicator is doing this or this instrument is this. No, you start by answering yourself those super important questions. So why do you really want to start trading? Just for profit? You want to feel like a trader, like an investor? What are your goals and targets? Like, is it just money, or your goal is to be let's say, quit your work and be a full-time trader, or just casually um, invest your savings just to protect, let's say, your money against inflation? How much time do you have? I explained this. How much money do you have? Also, it's very important, like what it implies, what risk you will be taking, right? For example. And which market do you want to trade on? Because you saw that on Alpari account, you can trade on almost every market, right? You can trade stocks, shares, CFDs, currencies, precious metals, indices, and so on and so on. You need education. And you understand this because you are here with us. So it makes me happy that you joined this webinar and you know that the education is very important. So ask yourself a question. What is your current level of knowledge? How many books did you read? Are you just randomly picking some stocks, or you have a legitimate trading knowledge? Do you have really an experience in trading? How much time do you have, not only for trading, but for learning new skill? And are you even willing to learn? Because I know a lot of traders who are trading for a long time, but they are not willing to learn. So what they do is they make the same mistakes all over again, and they don't learn on those mistakes because they just don't want to learn. They think, for example, that trading is really easy, but of course it is not. I mean, trading is simple, but it is not easy. There is a difference, because trading is really simple. Like you have two ways: buy or sell. The price mostly goes up on stocks. You just like randomly picking, you should have like 50% chance of a success. Simple, but it's not really easy. So answer yourself those questions. Of course, the best answers that you can have is like, what is your current level of knowledge? It's amazing. Do you have any experience in trading? Of course you have. How much time do you have for learning new skill? Unlimited. You can read books 12 hours a day, watch videos. Are you even willing to learn? Of course you are super motivated in order to gain new skill. Those would be the best answers that you could have in this case. We answered ourselves those questions. Sorry, wrong button. So let me tell you this. I often have this because, for example, my math skills are terrible. And people, when they find out, they're like, man, you are trading, working on financial markets, you're successful, you should be good at math. And I'm totally not. What makes it even better, recently I started to, I learned programming, this language to create trading robots, which is MQL language, which is based on C++. And also it is common to believe that people who are programmers, they are good at math. And I'm not. And I also didn't study in finance. I don't have a finance degree, and yet I'm working on a financial market successfully for the past 12 years. So studying finance or economy is not necessary, really. You can trade after any degree or without a degree. As I said, you don't even have to be good at math. Nowadays, all knowledge you can get yourself, from quantum physics to programming, and I'm a life example of this. I learned 3 languages just by myself, studying from the materials gathered online, and also I learned programming, for example. This also by the materials gathered online. I didn't attend any class at school or I didn't study programming. Just everything what you want to learn is there on the internet, and this is absolute beauty of the internet and the situation that we're having now, that you can learn everything what you want. And if you want to learn trading, nothing is stopping you really apart from yourself. You can sabotage the process of learning only yourself, because all the knowledge is there. Like here, you are attending a webinar which is absolutely for free, and I hope you're enjoying it, and I hope it will help you in your trading. So trading is not different, my friends. Okay, let's start with the books, because I do believe that in order to be a profitable trader, you should read some books. Of course, it's not necessary like 100%, but it would be really nice if you read those books. Reading books is awesome. It's an amazing skill. It's an amazing hobby that you can have, much better than watching Netflix. Although there are some interesting series on the Netflix which are worth watching, and there are some amazingly stupid books that are not worth reading. But in general, reading is much better than watching TV, and you can really have amazing lectures. So, for example, Steve Nissen, Japanese candlestick charting techniques, definitely an important lecture for you if you want to trade candles. Al Brooks, reading price charts bar by bar, the technical analysis of price action for the serious trader, super heavy lecture, complicated, so maybe leave it for the last one. Edwin Lefebvre, Reminiscences of a Stock Operator. This is super interesting because it's an old book about an old trader. I mean, not old, but happening many years ago. It shows you that times may be changed. Yes, we have spacesuits and, I don't know, bionic limbs, but trading principles did not change, okay? It did not change. And those mistakes and great things that this guy did back in the day, like several years ago, are still important and are still happening, and you need to know about them. Jack Schwager, Market Wizards. This is a book with interviews with the biggest brains in the trading. Definitely you should read that one. And Mark Douglas, Trading in the Zone. Amazing book about trading psychology that you also have to read. I mean, those 5 books here, you should read all of them, every single one of them, definitely. Books is not everything. You have also videos. On YouTube you have a lot of videos, and you have our videos. We recorded some amazing videos about trading, so I advise you to watch it. We also have our previous webinars recorded. I also advise you to watch it. Watch videos, learn, enjoy the process, and become a better trader. News and sources of information. You need to start reading financial news, whether you like it or no. You can be a technical trader like me. I do not read news, but at the very beginning you have to, because maybe you will be a fundamental trader. You need to find out yourself. Okay, so read financial sites, read interesting, follow interesting people on Twitter who have a lot of smart things to tell, to say, and enjoy the process of learning, of course. Trading journal. You should not start trading without a trading journal. Because I really tell you that it will kickstart your learning curve. What should be in a trading journal? Not only that you open a position and you won or lost, not only the date, but you need to put there why you opened this position. Also what emotions you had with this position. So I opened this position, but I wasn't really sure from the start. I was immediately scared about the future of this trade. I thought that I made a mistake at the very beginning. Write that down, everything. Then result, but then also emotions associated with the result. So I was super mad that I lost. I was super happy that I won, etc. So write that down. And also track this trade, I don't know, a few days, week after, and see what happened. Because maybe you had this trade, you opened this trade, you closed this trade because you were afraid of something, and then a week ago, this scenario that you were afraid did not happen, and if you would keep this position open, you would have much bigger profit, and this will be a lesson for you not to mess with the position. Just let it go and leave the position working, leave the money work for you. Don't be stressed about this. You made a decision, and yes, motivation. So again, you need to keep yourself motivated during the process of learning how to trade. And good movie, good films help with that. I share three great movies about trading: Big Short, The Wolf of Wall Street, and Wall Street. Maybe you don't like them. It doesn't really matter. It's like food. Maybe you like hamburgers. Maybe you like broccoli. It doesn't matter. I like those movies. This slide is about just keeping yourself motivated, whatever motivates you. Maybe it's music, maybe it's talking with other successful people, etc. If that motivates you, use it, do it as often as possible. Keep this energy inside of you, this fire, which will help you to gain more and reach more. Next slide, my friends. Demo account. So you have all this, you answered all those questions, you read books, etc. Now it's time for a demo account. But when you have a demo account and you're learning how to trade and you're thinking that you're learning how to trade, you have to answer yourself one question. Again, I place a lot of questions, but it makes you think and it helps you to understand things. So what is the most important thing in trading? Well, the most important thing in trading is trading psychology. And unfortunately, psychology does your mind, your psychology does not work on a demo account. This aspect of trading, which is the most important one, does not work on a demo account. So do not think that you will learn how to trade while using a demo account. You will learn about indicators, how they work. You will learn about how platform works, how to open orders, etc. But you will not learn about emotions because you will not get emotions from trading $100 demo fake dollars. You will not even get emotions when you trade 5 million of demo dollars. No, it will not happen. And trading is mostly about emotions. So if you don't train it on the demo account, don't be surprised that you will not get it from the day one on the real account, okay? Trading psychology. If it happened that you already have a demo account or not, if you have a demo account and when you have a real account, so if you have both accounts, maybe you notice that you have different results on a demo account and on a real account. Most probably, results on a demo account are much better than the results on a real account. Okay, usually it happens like this. Did you wonder why it is happening? Why results are often almost always different on a demo and on a real account? Why it's happening if the quotes are the same, the factors affecting the price are the same too. You have the same platform, you use the same orders, and apparently you use the same system. But is that so? You think you may use the same system, but you open and close and modify orders differently on a real account. because your actions are different when emotions are involved. And as we already established, on a real account you have emotions, on a demo account you do not. So yes, it is because of the fact that you're investing real money, it affects your trading decisions. Your mind forces you to trade differently than you would trade on a demo account. And if you ask yourself how to start building your forex trading strategy, you start it by understanding that trading psychology is the most important factor in trading. Okay? Period. It's no indicators, no price action. It's this. Because when you trade on a real account, you start to feel those emotions like fear, excitement, greed, and there's several other emotions involved in the process of trading, which are not present on a demo account, of course. Luckily, I told you that trading psychology is the most important, but luckily trading is not a rocket science, right? It is really simple. Simple again, it is simple but not easy. And believe me, like I've been in many countries talking with hundreds of traders, and I noticed that all of them, they make the same mistakes over and over again. Like vast majority of mistakes are those 4 mistakes here. Let's say it's 80% of the mistakes that the traders make. So they trade without a proper signal. So they don't have a strategy. They trade just for fun, just to feel the excitement coming from trading. Their position is too big, so they don't have proper risk control and money management. They don't have a B plan, and a B plan in this case is how to deal with the loss, and they are overconfident. And let me stop here for a while. Where is the overconfidence coming from? Well, overconfidence is coming from a big success on a demo account. So if you are successful on a demo account, you feel like, oh my God, trading is so easy. I'm going to be super rich. I'm going all in on a real account, which usually ends up with a big loss. Why? You already should know why, because trading on a real account is significantly different than trading on a demo account, which should be used mostly to learn how the platform works, not to learn how to trade. And this is just to name very, very few. So trading psychology, again, you have to ask yourself what are your targets. So first target should not be winning millions, but just staying above the water. Keep your account in the same size for the next half a year. Later, you optimize strategy, you drop the drawdown, so the maximum amount of losses to the lowest levels possible, and you make good risk to reward ratios. So when you win big. When you lose small. You should not focus on winnings, focus on not losing, but don't get me wrong, you should not avoid losses. Losses are a normal part of trading, you should just make them small. Professional traders, they focus on cutting the losses and looking for highly probable setups. Unfortunately, beginners, they focus on profits and they open whatever they see without a proper, without giving it a second thought. Remember, like, don't go for millions, really. If you're making 2% a year, a month, this is still amazing, and you make a really great return on a yearly basis. Remember, in order to start building your trading strategy, you need to focus on trading psychology. Really, rest will come later. Focus on the trading psychology. It will help you to remove the risk from investments. Okay? Beginners, they seek for risk because they think that trading should be exciting, but in reality, trading should be super boring, emotionless, free of any emotions. Okay, just do your stuff, execute strategy flawlessly. Don't get excited too much. Just go with the flow and make money. almost like a serial killer without any emotions. Watch out on your ego. It can be a huge obstacle. Market really teaches you humbleness. If you're not humble, market will teach you this if you'll be long enough on the market. Sometimes you're very short on the market. The market already like teaches you humbleness in the first week of trading. Okay, because market forces you to admit and recognize your mistakes, and is very good at it. So yes, if you have a big ego and you think it's good, market will show you it is totally not. Oh, it will. So, my friends, your strategy. This is just an example. I'm not saying that this is the best strategy in the world, but I had those rules at the very beginning of my trading career, and I still think that they are amazing, especially for beginners. So you go mostly with the trend. Then use like trend corrections to open positions with better prices. Then you you learn about candles and you use those candles in trading. But then you try to use them on important supports resistance levels, so you apply supports and resistances into your trading. If you don't know how it works, don't worry, because we'll talk about this on our next webinars. So I will definitely mention candles, I will definitely mention supports and resistance levels on our next webinar, so you'll get the whole package. Something about money management, like to go with lower lots, with lower position size after losses. Something about risk to reward ratio, that again you should have big wins and small losses. Don't trade on smaller time frames to avoid the chaos that is there, like mayhem. Try to go with the higher time frames like H1, H4 or daily. Do not go too crazy with the number of positions. Remember that quality is always better than quantity. And it's not like the more positions you will have better results. It's definitely not that. I think that less positions you will have better results. A few words about losses. The question is how to avoid them, and on purpose I made that wrong question, because you should never try to avoid losses, because they're just normal part of trading. You should just keep them small. It's a part of the game, it's a part of the big trading plan, it's a part of the big picture. It's an expense that you have to make when you're trading, because you're having your own company, you're a trader, you have your private hedge fund, and it's just a normal cost that you have to make. Try to make average winning trade bigger than the average loss. And I understand, like, people do not like to lose because of mostly two reasons. Well, first of all, they lose money, and sometimes too much if your risk management is poor, but also they are proven wrong. And we as humans, we don't like to be proven wrong. Like, we hate this. We can argue for hours, even if we know that we are not right. You will still argue sometimes, right? Unfortunately, it's like this. So trading will teach you that it's a bad thing. Again, loss in trading is just an expense that you have to make. You are not mad that you have to put petrol in your car, and it's also an expense that you have to make. And you will never be right 100% of the time, my friend, so don't expect that it will happen. Don't seek for it. Don't seek to be right every single time, because you will not. It does not work like this. Okay, my friends, that was a great first webinar. I think you learned basics of how to build your own forex trading strategy. Of course, I will explain this topic in a greater detail on our next webinar, so make sure that you follow us that you will watch the next webinars. You can follow us on the Twitter. I recommend this because I like Twitter. It's great for getting news about trading. So here's my Twitter and also the auxiliary Twitter. Make sure you follow us. Here is Twitter and Facebook of Auxiliary Intelligence, our separate company which was created for education and analysis. I also encourage you to follow us there. And of course, a small disclaimer, because we are not giving investment advices. We are not telling you what you should buy or sell. We do not give trading advices and recommendations. We do not. Okay, so keep that in mind. My friends, thanks very much for watching this webinar, and see you on the next ones.